Good evening, everyone. Welcome to Business Live. Coming up in this bulletin, government on course to save about $300 million from the debt restructuring agreement with independent power producers as it hopes to slash the debt by 20% to reach $1.2 billion from the initial $1.5 billion.
Close to about $300 million on the debt, and also over $1 billion in future payments. But at this point, we are close to $200 million, I suppose, and I'm sure by the end of the day, we will be able to give the gross figure.
We will be joined by an energy expert for some conversation on the back of that. Also in this bulletin, Minister for Energy and Green Transition hints of plans to initiate a barter agreement with Nigeria where electricity will be traded for gas.
Power and re-export. And we are in discussions with Nigeria to see if we can have a barter where we take their gas, convert it to power, and export the power to Nigeria.
Plus, Ghana Revenue Authority set to implement the modified tax program for SMEs from next month as it takes steps to simplify processes for small businesses and improve collections. We'll be engaging the Chief Executive of the Chamber of Young Entrepreneurs. We have details of these and more lined up for you. Please stay on. Grateful you could stay on with me. I am Pius Kojobaka. A look now at our stories. Government is on course to save about $300 from the debt restructuring agreement with independent power producers. Now, this milestone will significantly reduce the debt owed IPPs by 20% to reach $1.2 billion from the initial $1.5 billion. And this was disclosed by Ben Boache, a key member of the board tasked to mediate the negotiations with the IPPs. He made the announcement at the Future of Energy Conference organized by the Center for Energy Policy, SEP.
It's a work in progress, and we appreciate the commitment of government to engage multiple stakeholders to find solutions to the problems of the energy sector. And we've been privileged to be one of the organizations that are at the forefront of supporting the ministry to relook at the cleanup of the power sector in general. And one of the jobs has been to look at the IPPs, engage them in good faith negotiations on their outstanding debt. I mean, the commitment of government is to be able to treat the debt that we have it, then be able to structure a payment mechanism to deal with the outstanding debt. What we have done so far is to agree with a lot of the IPPs on a structure of payment, averagely 4 years to 5 years payment plan to be able to amortize the debt, and also in return get some concession from them. I must say that the IPPs have been very magnanimous. Even though we have a binding contract and agreements with them, they've been magnanimous to give us some haircut, which I'm sure the minister would announce at some point. But we are just happy to help, as we always do.
How much could a country save with this arrangement?
We're looking close to about $300 million on the debt, and also over $1 billion in future payments. But at this point, we are close to $200 million, I suppose, and I'm sure by the end of the day, we will be able to give the gross figure as to what has been achieved so far.
All right, so let's have a broader conversation on the back of this revelation. Joining us via Zoom is the technical advisor to the Ministry of Energy and Green Transition, Dr. Yusuf Sulemana. Thank you so much, sir, for making time to join us here on Business Life, and good to see you. Now, per what Ben Boache is saying is anything to go by, I guess the progress of engagement with the IPPs is commendable, right?
Yeah, thank you very much, Pius. Good afternoon to you and your cherished listeners and viewers. Yes, indeed, that is a huge milestone within the power sector, and that contributes significantly to stabilizing the entire energy sector. Yes, so I think it's a step in the right direction. This is one of the steps in addition to aggregate of steps that has been taken to ensure we have a stable power supply to the population of Ghana. If you notice very well, in addition to what Ben just mentioned, renegotiating with the IPPs just to make sure that the debt level is sustainable. In fact, if nothing had been done, if this kind of step hadn't been taken, what we simply had was something not sustainable. You keep on paying and the debt is never finishing because you are not paying on good grounds. The grounds for negotiation, I mean, the foundation that was built for the contract wasn't that solid, and so that was not having positive benefit to the nation. So what the committee simply is doing, like Ben mentioned, they're supposed to elongate the period of time to make the servicing of the debt sustainable, and that gives government of Ghana enough time to be able to repackage and come back to be in good shape, to be able to to pay back. And I can tell you on authority up to now, from the beginning of the year to now, there hasn't been any default in terms of the payment. And the thing simply, I mean, the reason is simple that, I mean, there's good faith on both part of the government and that of the IPPs. And so hitherto, this kind of good negotiations and kind of good collaborations was missing. And if you're a business partner, IPPs are business partners, and if they don't see that kind of good faith in negotiation from you, and I think from the beginning of the year up to now, I would say it's been excellent, and that's also one of the things that has contributed to a stability of power supply as we have now. And in addition to that, Pius, you may know that other strategies that have been put in place in addition to this negotiation includes, among others, streamlining the entire procurement processes that was so much, burdensome, not having value for money. And another one is just adhering to the cash waterfall mechanism, and that has resulted in consistency in cash flow. And so the ability of the government to make consistency in payment is also showing the IPPs that we can negotiate in good faith. And I think overall it's a great thing. And I mean, giving government that bit of time to risk strategize to pay back, it just create an enabling environment for both government and that of the IPP. So at the end of the day, IPPs are good players within the scene, and once we negotiate with them in good faith, I think we're going to have a power supply, and that's exactly what the ministry is doing. Yeah.
And I'm trying to make sense out of that. What will that mean to the energy sector largely?
So largely, like what we are seeing now, I will tell you that it's not out of blue. It's as a result of aggregated policies, cogent policies that have been put in place. If you notice, early part of the year, we have shaky power supply, where we have intermittent disruptions within the power supply. The rollout of these policies, aggregated together massively, is the one that is contributing to what we are experiencing today, a bit of stability in the power supply. So yes, it's going to be a great one, and I think it's contributing hugely to having a robust power supply within the grid. And I'm sure going forward, we're going to have a lot of beautiful things coming. Pius.
And in the spirit of that, government is hoping to amortize the debt prepayment, basically, and also, in return, get some concession from them. Is that possible, do you think?
Yeah, very much possible, especially when they see that the two parties are negotiating in good faith. And so the whole idea is to show each partner that we are negotiating in good faith. And part of negotiating in good faith is to live to your commitment. And that's exactly what government of Ghana is doing. They have lived up to their commitments. The important thing is to have consistency in the payment. Cash flow is very important, Pius, in business. If even you are not going to pay everything, but you are consistent in your payment, and the IPP, they are much aware that money is coming and the money is consistent in the payment to their account. I think it's just going to make the negotiation very beautiful and very interesting. I think so. Going forward, we're going to have a lot of beautiful things coming, and one of it is just this negotiation. And when it's well concluded, I think it's going to be win-win for government of Ghana and that of the IPPs. Yeah.
And Dr. Suleimana, in a separate development, the Aleni government says it intends to initiate a barter agreement with Nigeria where electricity will be traded for gas. And I'm wondering how this is going to be done, knowing very well that already when upstream, the FPSOs are flaring gas and what have you. But our inability to get that infrastructure to ensure that we make use of the gas, we know that's been flared. I'm wondering how the minister or Ghana intends to do that with Nigeria.
Yeah, so for now, the details I don't have much details about that. I will say, and I think it's something that has been discussed. Sure, but at the end of the day, I mean, it's just going to look at what brings value to the government of Ghana. I don't think the ministry will take any step that at the end of the day that will not bring value to the government of Ghana. Of course, we are also, like you mentioned, our main priority is to look inward to ensure that we become sustainable. And that's how we are championing gas to power. We are trying to build our infrastructure to ensure that we are self-reliant. And I think ultimately that's what it's going to be. The idea of barter and other things, these are side considerations, which if it's going to it's something we're going to champion. But at the end of the day, our target is just to make sure that we build our infrastructure, to become resilient and so that we become energy sufficient. And among other ones is trying to build, say, gas processing plants, building of pipelines, all these ones with comprehensive infrastructure in place. I think it will help us to become, power sufficient, energy sufficient, and so that we don't rely unnecessarily on
technical advisor to the ministry.
Who will have control over what happens within India. Yes.
All right. Thank you so much, Dr. Yusuf Suleiman, technical advisor to the Ministry of Energy and Green Transition. Grateful speaking to us here on Business Live. And want to stay a while longer within the Ministry of Energy and Green Transition because this sector minister, John Jinapor, has hinted of plans to initiate the export of electricity to Nigeria under a barter agreement for gas. Now, speaking at the Future Energy Conference, Mr. Jinapor stressed the need for regional collaborations.
Of Energy Conference aims to drive stakeholder collaboration towards an inclusive, sustainable energy future for Africa, providing actionable solutions and policy recommendations. Speaking to the media, Executive Director for the Africa Center for Energy Policy, ACEP, Ben Boache, called for the adoption of emerging technology to solve Africa's energy challenges.
So what we're trying to do is to engender a conversation that actually ensures that we can quickly accelerate energy access for our people, and also mindful of the transition that is happening. How do we think through the trends to make sure that Africa is not left behind? We will need to optimize emerging technologies and also be part of the technological evolution to design context-appropriate solutions to provide energy access, to our people.
Delivering his address, Minister for Energy and Green Transition, John Jinapor, hinted of plans to explore the export of electricity to Nigeria under a barter agreement for gas. He was optimistic that inter-African collaborations is crucial to solving the continent's energy challenges.
So far, we supply power to Togo, we supply power to Burkina, we supply power to Côte d'Ivoire, and we intend extending to other neighboring countries. We also supply power to Benin. And so in the spirit of that cooperation, we believe that we can work together and we take gas from Nigeria. And so what Ghana does is that we take the gas from Nigeria, we generate power and re-export. And we are in discussions with Nigeria to see if we can have a barter where we take their gas, convert it to power and export the power to Nigeria.
Meanwhile, Rukaya El-Rufai, special advisor to the President of Nigeria on the National Economic Council and climate change, bemoaned the poor energy regulatory framework on the continent.
The political and regulatory instability from policy somersaults leads to difficulty in doing business. The poor transparency, weak enforcement, and governing institutions also affect our pricing of risks.
This year's conference was held on the theme, Financing Africa's Future, Unlocking Investment for Energy Access and Economic Transformation.
Away from energy-related stories, the Ghana Revenue Authority is set to implement the modified tax program for SMEs from next month as it takes steps to simplify processes for small businesses and improve collections. And the move is part of measures to improve tax collections and address concerns of some medium-sized enterprises in the country. Here's Anthony Sapon, Commissioner General of the Ghana Revenue Authority.
We've talked about in this country expanding the tax base, particularly for the micro, small, and medium enterprises. We are introducing within a month's time what we call the modified taxation. One, to define at a minimum base taxes that certain categories of businesses will pay a flat. So for instance, if you are doing a business and your turnover is 200,000 a year, we are saying just pay 3% of that. That probably works out to 5,000 or 3,000 the whole year. That is all that you have to pay as a small, medium enterprise. And we are coming out with an app as well, which we'll be deploying very soon to help with registering and to help with paying, because these people will not leave their environment of operating businesses. It is estimated that we have over 5 million of such businesses in Ghana. But potentially, let's take the assumption that we will rake in 2 million of such businesses to the tax net. If on the average these businesses are paying 5,000 a whole year, that is 10 billion. That translates to 1 billion a year with potential to grow.
Tax consultant Francis Timoboy says state institutions are to blame for the huge debt owed the Ghana Revenue Authority. This follows reports that 9 institutions, including state enterprises and some private firms, owe the GRA some significant amount in taxes. Speaking to Joy Business, Mr. Timoboy noted that the institutions are only supposed to honor these taxes, which have already been paid by the public. Now, he noted that this situation is as a result of mismanagement of cash inflows.
The Ghana Revenue cannot be blamed at all. In fact, they have done the right thing. They have discharged their function under the law. Their duty is to raise the assessment, and then the institutions are supposed to pay. I think largely the institutions are to be blamed, because if you cite cash flow problems as the reason why you are failing to pay taxes, then that tells you how institutional management of cash flow is. They are not managing the cash flow very well. Why am I saying this? Let's take some of the taxes. For example, VAT. VAT is supposed to be borne by the consumer. So imagine graphic communication. You sell to people and then you collect the VAT from we consumers. Now, if you collect it, you are just acting as an agent. You are supposed to pay that tax to the Ghana Revenue Authority. So if you fail to pay, then it means that you have misappropriated or you've misused the money. Again, take PAYE, employee taxes. The tax is you are supposed to just collect it as a trust and then pay it to government. So what is the issue that you say cash flow problems? Even if you have supplied to government and government is not paying you and there are delays, there are instances where the GRA will allow you to offset your tax liability against what government is owing you, so that at the end of the day, you will still pay your taxes. And these mechanisms exist. So if you cite cash flow issues as the problem, then you are not managing your cash flow very well. If it has to even, let's take, for example, corporate tax. Corporate tax is tied to profitability. So if you have not made profit, you don't pay tax at all. So I don't see why people will say cash flow. GRA may have a payment plan available, but we can't say cash flow is the reason why we are not, honoring the taxes that have been collected from people for which we are supposed to hand over to government.
You're still watching Business Live. We have more stories for you after this break. Hello again. President John Mahama has pitched government's flagship economic program, the 24-hour economy and the Big Push, as initiatives that could offer the best returns to investors. The president maintained that these programs have been structured in a way that offers the highest returns to investors. President Mahama said this when he engaged government leaders and businesses at the 8th Africa-Singapore Business Forum.
Africa is investable, and Ghana is your reliable gateway to that continent. Our economic strategy is anchored in productivity, exports, and jobs. We call it the 24-hour economy for a reason. Ghana is open for business 24 hours a day. We're aligning infrastructure, incentives, and skills so factories, farms, ports, and service centers can operate around-the-clock shifts safely and competitively. At the core of this is the Barter Economic Corridor, our most ambitious integrated development to date. The corridor has 4 pillars. The first, irrigating more than 2 million hectares for year-round farming. The second is agro-industrial parks for textiles, pharmaceuticals, and food processing. The fourth, tourism and hospitality along one of the world's greatest inland lakes. And the fifth, transforming the Volta Lake into a cost-efficient inland transport spine that reduces logistic costs and linking farm factories to the market. We're complementing all this with catalytic projects like the Legon Pharmaceutical Innovation Park, the Kumasi Machinery and Technology Park, the Akosombo and Japon Garments and Textiles Park, the Digital TVET Centers of Excellence, and Renewable Energy Corridors. Our Big Push program, infrastructure program, will accelerate construction of roads, power, and digital connectivity to crowd in private capital and unlock scale. Singapore's strength aligns perfectly with Africa's and Ghana's priorities. Our position is straightforward: a stable, reform-minded country connected to the African Continental Free Trade Area, a 24-hour economy that matches your needs for speed, reliability, and standards, a pipeline of investable projects in agribusiness, logistics, manufacturing, energy, digitalization, and tourism, and a partner that values integrity, predictability, and long-term relationships. In return, Ghana and Africa ask for what Singapore does best: practical collaboration, technology transfer, disciplined project execution, blended finance, and a shared commitment to skills development. When Singaporean and African firms collaborate, we will create jobs for our youth, we will diversify global supply chains, and drive growth in sustainability and prosperity.
And back home in Ghana, we know the cedi is still the best performing currency against the dollar in Africa. And this is despite recent pressure that has moved the rate from 10 cedis, 30 pesos to 11 cedis to the dollar. More in this report. According to the Data Bank research report, which tracked the currencies of top economies in Africa, the Ghana cedi is still on top, ending last week. However, in terms of high level of appreciation against the dollar, it has lost some grounds and showing about 36% ending last week. A careful look at the report showed that other major currencies in Africa have also lost some grounds as well. It is not clear whether the recent performance of the dollar on the international market might have played a role. However, here in Ghana, the cedi has been under some sustained pressure against the dollar over the past 2 weeks. It has moved from 10 cedis 35 pesos to more than 11 cedis. Speaking with some of the commercial banks, the challenge has been influenced by limited dollar supply on the market by the regulator. But the Bank of Ghana defended its stance in terms of dollar support, rejecting arguments that it is to be blamed of the current depreciation of the local currency. It had argued that it is not in the practice of fixing the exchange rate. The central bank has told Joy Business that its market intervention will be strategic and not driven by sentiments. Let's now go to myjoyonline.com/business for some quick read. Government's debt owed IPPs to be reduced by 20% to $1.2 billion. That's according to Ben Boache, and we brought you that story here on Business Live. Also on the portal, cedi crosses 11 cedi to US dollar amid supply pressures. Of course, we brought you that story as well here on Business Live. Do visit the portal and get yourselves updated. myjoyonline.com/business it is. I am Pius Kojobaka, grateful serving you.